Business growth is more akin to a marathon than a sprint. Certain points in time, you might be going slower. Certain points in time, you might be going faster. And as long as we are able to continue to move along in the correct direction towards that goal, that would then be a marathon well run.
Welcome to the Dollars and Sense Business Podcast, the building series, where we talk to business leaders about their stories and game plan on business building. In this episode, we discuss building a REIT with Serena Teo CapitaLand Ascott Trust. Serena spent over 15 years in the property management business, and currently she's CEO of the management team behind Asia Pacific's largest hospitality trust, SGX-listed CapitaLand Ascott Trust, or CLAS for short. Okay, thanks for coming on this podcast, Serena. I invest in a REITs portfolio myself, so I'm very delighted to be speaking to you on our series.
Thank you very much, Dinesh, for the invitation to be here. Very happy to be here sharing views from the REIT, and also very happy to be here to meet the viewers of Dollars and Sense.
All right, okay, let's get to it. Okay, everyone should have an updated LinkedIn account, I think. It makes my job so much easier when I get to look at a person's professional history before speaking to them, and that's what I did with you. Okay, so I found out that you were with the Ascenders Group for about 10 years. And today is part of the CapitaLand Group after the merger, and you became CEO of CapitaLand Ascott Trust in 2022. So I'm just wondering, how has this journey been for you so far, especially transiting from the merger, and joining the trust?
Yeah, that's right. I've actually been in the larger company for a fairly long period of time. I must say it has been a very exciting journey for me. Within Ascenders, I've had several experiences including managing India Private Fund, as well as the part of the team of the CapitaLand Ascenders REIT prior to CapitaLand Ascott Trust. I joined CLAS about 2 years ago as a deputy CEO, and then taking on a CEO position in the middle of last year. Very exciting times. Very happy to be joining the trust and this sector at this period of time whereby we're out very clearly out of the pandemic. Many opportunities for us to be able to reconstitute our portfolio to bring even better value for our unit holders, right? So you'll see actually the trust actually transforming fairly quickly over the last 2 to 3 years.
Yeah, actually that's exactly what I thought when I saw joining in 2022, like perfect time to be joining a hospitality trust. Okay, so I had a follow-up question to this actually. So no two companies will have the same working culture, and you've been through the process, right? So I'm just wondering, what's it like marrying two working cultures with two companies after an M&A?
Yeah, actually, if we look back, Ascenders and CapitaLand are both Singapore-based companies. So there are actually more similarities than differences in the working culture, right? So because of that, I think integration has been relatively smooth. For me personally, the opportunity to join a combined platform that is a lot bigger, more global in scale and size, actually allows us to be involved in businesses that has larger access, with the bigger platform, larger access to business opportunities as well as economies of scale, right? And I think for employees in the larger company, the access for more opportunities for growth, development, and rotation, it's also a very valuable feature of the combined entity.
Okay, I mean, talking about economies of scale, I went to your website and I learned that, you guys own 103 properties in 44 cities, and I'm just reading this. Correct me if I'm wrong, across 15 countries, and this is spread across all over the globe as well, Australia, China, Europe, Japan, US, and of course, in Singapore as well. And not just that, the property portfolio also spans across different lodging types. I saw, service residence, hotels, rental housing, and even student accommodation. So another thing I was thinking, like, how is it like, managing such a diverse portfolio of properties internationally, not just geographically, but different asset types as well?
Yeah, well, in short, it's never a dull moment, right? But the challenges are also opportunities, the way I see it. I mean, the size and the span of the portfolio means that actually the concentration risk is mitigated, right? So you've read our portfolio. Given that you're a REIT investor yourself, I think you'll be very clear. CapitaLand Ascott Trust, or CLAS, is actually the largest lodging trust in Asia Pacific, right? And given our size, we invest in 4 different asset classes: rental housing, student accommodation, hotels, as well as service residences. So this provides a diversity across across the asset classes. We are located in 15 different countries, which provides concentration risk mitigation geographically, right? So that size and the diversity across the geography and asset classes provides resilience, right? So the portfolio is such that we have resilient income sources coming in from the rental housing, student accommodation, as well as our properties that we manage under, for example, master leases, as well as management contracts with minimum guaranteed income, which essentially means that, these are contracts whereby we are guaranteed as unit holders a certain level of income in whatever times of performance, right? Today, within the diversification strategy, we currently have about 20% of our portfolio in student accommodation and rental housing, and about 50 to 60% of the income coming in from stable income sources, right? So this provides resilience, and then the other 40 to 50% of income coming in from growth income sources provides us with the ability to yield up when the travel recovery comes back, which is really what we are experiencing now. Yeah.
Actually, the other thought that we were having, or we did discuss before we started recording, was because of the resilience of the portfolio, during like a pandemic, for example, that we were just coming out of, it also gives you like that shelter to continue getting revenue sources, right, from your properties.
That's right. I can see that you're very you're very attuned with the history of growth of CLAS. Thank you very much. Yeah. So during the pandemic, I think one of the key things that we did to reconstitute the portfolio for higher resilience was to expand the trust mandate to invest into student accommodation sector. So in 2021, we invested into 8 student accommodation properties. And in 2022, we actually doubled down to invest further into rental housing and student accommodation properties by investing into another 12 properties in these sectors, right? So student accommodation and rental housing tend to be more counter-cyclical and resilient. Since investing in these properties, occupancies have always been maintained at above 95%, good year-on-year rent growth, so that provides a very strong, resilient sector to the trust income.
Okay. I just thought of another question. I'm going to put you on the spot here.
Yeah, go ahead.
You own a hospitality portfolio. Like, where's the best place you like to live at one of your properties?
I would say every time I travel, I will try to stay in a service residence. One of the Ascott service residences, whether it's an Ascott, a Somerset, a Citadine, or even a Life, right? There are actually several brands that we have within the Ascott portfolio, right? And the reason is because I'm a fan of service residences. Service residences actually provide us generally with more space. You also have amenities such as a kitchenette, sometimes access, most of the time access to laundry facilities. It actually makes it very easy for us to have a home away from home.
Okay, interesting, yeah. Okay, so even before the merger with Ascendas Hospitality Trust, right, you guys were the largest hospitality trust already in Asia Pacific, and I guess the merger just entrenched this position for you guys. So when it comes to business expansion, you can either grow organically or through M&As. And the common thought process, is that organic expansion is slower, a bit more painful, and while M&As give you instant foothold in these countries, territories, or sectors. So do you agree with this sentiment? And as a strategy, how do you guys think about M&A as your growth?
I think for me, business growth is more akin to a marathon than a sprint, right? And in a marathon, you adjust your speed according to the terrain, the conditions of the terrain, as well as the opportunities, the access to opportunities, right? So at certain points in time, you might be going slower. Certain points in time, you might be going faster, right? So it's really, I think, the right approach for the right type of conditions. But I think what is clear is that, the end in mind is always constant. And as long as we are able to continue to move along in the correct direction towards that goal, that would then be a marathon well run.
All right, cool. Okay, so this leads in nicely to my next question that I have. CLAS was listed in 2006, obviously as Ascott Residence Trust, and it had a property portfolio worth about 856 million. Today it's grown to about 8.1 billion. So does size matter for REITs? And also I'm wondering, the need for constant growth, is it to be a valuable part of an investor's portfolio? And is it even to be relevant in the industry for yourselves?
I think size matters for a REIT, right? But the benefits are actually beyond size per se. So take, for example, CLAS. In 2019, when CLAS, or ART as it was formerly known, merged in with Ascendas Hospitality Trust, that combination gave unit holders of both ART and AHT several advantages, several benefits. One of which was the increased size of the combined trust allowed us to be included in the FTSE Nareit Global Developed Real Estate Index, right? Being included in that index offers unit holders and the trust access to a much wider investor pool, as well as enhanced liquidity, right? Both of which are actually important facets to a REIT's success, right? The combined portfolio also increases the diversity of income coming in from various sources, such as geographies as well as asset classes. And following on that merger, we've been able to do a lot more, right? Including, for example, like what I mentioned, allowed us the ability to access opportunities outside of the hospitality space, which are into student accommodation as well as rental housing. And some of these which would not have been possible, I think, for us to bring on had we not gone through that merger and increased in size.
Okay. Yeah. I know. I'm also getting this from your website. I just went to it and I saw just in the past few months, there are information for both divestments and acquisitions. So I'm just wondering how you decide which properties to acquire and divest.
Okay, thank you for the question. For us in CLAS, our end in mind is really to be able to deliver a sustainable level of returns to our unit holders, right? And to do that, we do a few things, but at the end of the day, it boils down to being able to constitute a portfolio that can continue to deliver that kind of value to our unit holders, right? In order to deliver that value, it will be through distribution as well as NAV, right? When we look at our portfolio of 103 properties, we'll look at it from the perspective of whether it is more valuable to hold, or is there a certain value to be able to recycle the proceeds into higher yielding assets. So Dinesh is right. In just last month we had announced the completion of divestment of 4 properties. We divested 4 properties in regional France at 63% premium to book. Right, the exit yield of that divestment came in at about 4%. And earlier, before that divestment, we also announced acquisition of 3 properties in London, Dublin, as well as Jakarta. And we're actually entering into that acquisition at an entry yield of 6.2%. So therein, you will see that, what we're trying to do is to be able to divest at lower yields and then reinvest into higher yields, right? In addition to that acquisition, we had also announced organic value add opportunities, and that's really the renovation opportunities in some of our existing properties. One of which was the Sydney Central property that we have, whereby there was an opportunity for us to build it up to increase the room inventory by 28%. And the yield on cost on building that up came in at about 11%, which was a very good yield for our portfolio, right? So essentially what we will try to do in terms of portfolio reconstitution is to look at both organic opportunities, such as the Sydney Central property, or inorganic acquisitions, such as the acquisitions in London, Dublin, and Jakarta, in order to bring about that continued capacity for the trust to be able to deliver even better returns for our unit holders.
Okay, so another thing I was going to ask about is, the current geopolitical landscape. It's been very uncertain. Interest rates are its highest level in 22 years, and everyone's talking about inflation, right, and rising costs along with that. So I'm just wondering, are these things at the back of your mind? I'm sure they are when you do acquisitions, but are you also pressured to do acquisitions in the first place when you're a REIT?
No, not at all, actually. I mean, what we do is actually more opportunistic. It's really back to the business objective of delivering stable distributions to the shareholders. That I think is the end in mind. And earlier, I also mentioned that to do that, we take active steps to reconstitute the portfolio such that, we always have the capacity to be able to deliver better returns to our unit holders. So it can be through divestments, it can be through investments, it can be through AEIs opportunities. So it's really a combination of these three main strategies in order to be able to deliver that capacity to create more growth to our unit holders. So take, for example, the acquisitions that we have just announced are, to me, probably the best opportunities for us to bring about that capacity for future growth for our unit holders. These three properties are actually located in the most prime locations of very strong gateway cities, right? So the London property that we are acquiring is actually in a very exclusive Mayfair area of London. The property that we are acquiring in Dublin is in the heart of Dublin, which is the Temple Bar district. The property that we are acquiring in Jakarta is in the Embassy district or CBD of Jakarta, and a new property within a mixed development, Ciputra World 1, right? So these are possibly the best prime located properties that we can get in these cities.
Okay.
And on a yield, risk-adjusted yield basis, it's also coming into us at a very attractive rate. So, it's coming into us at an entry yield of about 6.2%. The other feature about this acquisition is that embedded value add opportunity for us to unlock even more value. And that's really through the renovation of the Cavendish, which is the London property, right? So plans to renovate are already in place. The capex have already been scoped in, and after renovation, that provides an even higher returns to the unit holders. So I think what we're trying to do is really to position the trust to have another tailwind of growth beyond travel recovery.
No, I have to say that you guys do a really good job with upkeeping the properties. So in case the viewers don't know, we are at an Ascott property and it looks very nice around us. I wish you could see more of it. But it's really nice, right? I think the way you upkeep the property and thanks for inviting us here. We've also come to the end, but before we end, we usually like to ask this question to everyone on our show, right? What's your one advice for someone trying to lead a business in Singapore today?
Okay, not so much advice, but I thought I would just share what guides my professional compass, which I think is very important, right? So at the end of the day, what guides my compass every day is that, to have a very clear end in mind, a business goal end in mind, maintain the flexibility yet prudence as we move towards that goal, stay the course, despite challenges, but not saying that we ignore the challenges, keep our eye very clearly on the challenges, but stay the course so that we can emerge stronger. And really at the end of the day, and most importantly, is to be able to continue to create value to the business, our partners, and more importantly, my team and colleagues.
All right. Okay, thanks for sharing with us. Thanks for being on the show as well.
Thank you very much for inviting me, Dinesh. Very happy to be here. Yeah.
All right.